This is the Meerkat in one more time for D7 with the broad market review, good through August 14, 2016. Well, what did Mark Twain say? It ain't what you don't know that gets you in trouble. It's what you know for sure that just isn't so. Well, the markets were ho-hum this week, and so let's take a look at what happened Friday, then pull back, take a look at what happened for the week, and then pull back now that we have about half of the month completed and look at what's happening on the monthly charts. So first of all, what happened on Friday? We had a mixed day on Friday with the S&P and the Dow down a little bit, and the Qs and the small caps Russell up just very slightly. And bank dropped a little bit, so it's a little more bearish than bullish as far as the mixed results. But the VIX, it dropped again. So that was Friday, but let's pull back and take a look at the daily charts here. First on the SPY, and on the SPY daily chart here we are, last 5 days hanging at new all-time highs. That's right, we were high basing here for almost a month, and now this last week we've been high basing at a slightly higher rate. Wow. It's interesting. Why did this dip? That was the Brexit vote, and then as soon as they made the vote, we've been rocketing up and high basing here. It's summer doldrums, folks. Here on the Dow, we had this bull flag. It broke out, and then it's been just kind of popping around up here. It did set a new high on Thursday as far as record close, and it pulled back just a touch on Friday. How about the Qs here? Man, look at this. This is almost a straight run up with a little bull pullback here, and it's not high basing. It's slowly going up here, folks. New all-time highs. In fact, I need to reset that there to new all-time highs on Friday, and another new high. And then the small cap Russells here, it's run up here, and it is high basing right here. And again, not near its highs of all time. That's way up here, slightly lagging. Alright, let's take a look here at the weekly charts. On the SPY weekly chart here, look at that. We have a doji this week. It's hard to see it because we did set a new all-time high close for the weekly chart. But it is a doji. But this is 1, 2, 3, 4, 5, 6. 6 out of the last 7 weeks we have gone higher, folks. Remember, the typical leg is 4 to 6 candles, and now we have a doji candle here, even though we are slightly higher. So resting up here again on lower volume. Take a look at volume on the weekly. It's decreasing here. We decreasing volume on the weekly for the SPY. How about the Dow? Weekly here, it's up here, it tagged, and now it's closed at all-time highs for weekly, and with a little pullback there. Then we have the Qs here, and this is straight up. Look at that, 1, 2, 3, 4, 5, 6, 7 weeks straight up. Now again, in any time frame, 4 to 6 is a normal leg on a run, and so odds are now starting to move to where we may have either a sideways candle or a slight pullback. Then we have the small cap, same thing, 1, 2, 3, 4, 5, 6 weeks, and then this week just down a fraction for the week on the small cap. So it did not quite make it out positive this week, but that's a nice run right there. And we'll take a look here at bank. Can't go anywhere without bank. Here's the all-time highs on the weekly chart, and it is in a nice channel coming up here on the weekly. We're right in the middle of the channel. So again, what do we look for in up channels like this? We look for bull pullbacks. This was a beautiful one, but it just exceeded the highs of this last swing, and then pulled back for this week just slightly. And then, of course, good old VIX. Boy, oh boy, is it low. How low can you go? Look at that, going all the way back to 2015. We haven't been down here below 12 for very long. We closed the week at 1155, folks. That is very, very complacent, very low volume. We're in this summer doldrums. People are on holiday. So, you don't have to be trading all of the time. Let's take a look then at the monthly charts. Here's the S&P 500. And the SPY monthly chart. Again, we're only halfway through the month. This is not a closed candle yet, but right now we're sitting at all-time highs. But look at this huge run up on the monthly. Huge run up from 2011 all the way up here to 2015, and then we're going sideways with a couple of dips. Now we're back up here to all-time highs, but lower volume here the last 2 months. And of course we can't count this volume on this one yet because it is so early in the month. How about the Dow? It looks about the same. It ran up, it's just chopping around, and now it's starting to go higher. Qs ran up, chopping around, going higher, and then now this one here is just a little bit less bullish. It came up, it pulled back harder than the rest on the small caps, and now it's back up almost to those highs, but not quite yet. So that's it on the monthly chart. So what's it telling us? We're summer doldrums, folks. It's pretty darn quiet out there. If you're already in positions to the long side, just keep managing your stops and be either looking for new opportunities. Now, overall market is stalled, but because of earnings, a lot of individual stocks were rocketing up or rocketing down because of their earnings just on the news. So some individual stocks have been moving big. So be careful if you are getting ready to have earnings on your particular stock, even though we're winding down at the end of the earnings season here. You need to either have protection, which would mean you have to hedge it, or you need to get out of it. We recommend you not trade over earnings. Why? You don't know what the earnings are going to be. That's a 50-50 chance, right? Could go up, could go down. And we don't know the market's reaction to those earnings. That's a 50-50 deal. So really you have about a 25% chance of getting it right. So it's best to be out of it for earnings or having it hedged where you're neutralized. This is the Meerkat. Hey, if you'd like to learn to trade the Grok Trade Way, I know that we already talked about doing the free 101 training that we offer just to find out what trading is. That was right here at groktrade.com on the cover page there. But if you have been trading for a while and you might be struggling, like you're making a lot of trades but you're not making a lot of money, well, maybe it's time for mentoring. So go here to Trading Mentor right there, and you can read about what is our mentoring program. Hey, look, our full commitment to you is to give you the tools so that you can be a successful trader and not just keep paying what we call market tuition to the market for trading, making a lot of trades but not making money. Why don't you make trades and make money? Learn how to do that the right way. So over here on the side is all about what you receive with our mentoring program. Again, we have a 3-day concentrated training to start you off, but then we're there every step of the way beyond that. No extra charge. And here are some reviews of people right here on this side. Look at all these folks we have reviews for of what the mentoring has meant to them. Look at that. Tons of them. Many of these are unedited, so that they might not be pretty, but you can find out what they said before, during, and after the questions that we asked them. So my challenge to you is to go down to this page here at the bottom and take a quiz. It is, can you trade successfully without having a mentor? Well, start right there. There's 10 questions you can answer and see maybe you might need a mentor. And if you are, you could at least have a conversation with us about what your trading is and how our program might help benefit you. This is the Meerkat. See you next time. Until then, trade safely and trade well.